have an open session. That means the session is open to non-members, and we'll be disclosing in general terms the product, the characteristics of the product, the inner workings, how our day-to-day actions unfold, and how this product can switch your trading career. So, and we'll do this in a very practical manner. We'll get hands in the environment here and go over some practical stuff so that we see what we do on a day-to-day basis. So we'll start now by looking here at the environment, the signals environment. I'm logged in as a member, and this is the information you see. There are several blocks which we'll explain in detail, each one of them. We'll also extend the session into explaining our philosophy behind the product, our vision with the product, and how you can extract the most out of it. This is not only a signal service where you have the signals and the trades to copy and follow, but we try to go a little bit deeper with our signals. We try to offer an educational layer on top of that so that you can use the signals as a starting point to understand better the markets, to understand better the theories that you use, the tools that we use, that you go from the very basic levels of the description, of the definition of all the tools and techniques we use into how to apply them in the market individually, and finally how to integrate them. Our scope is broad. We use a combination of technical analysis, of macro analysis. We try to combine different scopes of different theories into the mix, so that you find that there is something for everyone, for every profile, trading profile, for every time horizon. We understand that most of you might be short-term oriented, but you will see that we offer analysis and actionable trade setups that are both short-term and mid to long-term. Okay, so our scope also covers mainly Forex, but we'll go a little bit beyond that. And we understand markets as being related to each other. So we cover essentially equity indices, we cover commodities, mostly gold and oil. We cover also the cryptosphere with the main crypto assets. We analyze them on a continuous basis. We look for trade setups on these markets, but the signals you will see, they are mostly on the Forex market, okay? And the way we work here is with the help of automated strategies, okay? The page you are looking at right now shows the open trades, okay? Each of these small boxes is one trade, and you see all the assets that we can see on the boxes are foreign exchange pairs, okay? At the moment, on an automated basis, we don't cover non-Forex markets, so that's the reason we only see Forex pairs here. And the information contained in each one of these chips is the pair being traded, the trade ID. So when we make reference to a certain trade, we refer to a certain ID. We mentioned the strategy being used, okay? We'll talk a little bit more about that later. And then we see the entry and exit parameters of the trade, the entry price, and the take profit and stop loss levels, okay? and also information about the quality of the stop. Okay, some strategies use conditional stops or conditional exits. This is a minority. Most of them use fixed or dynamic stops. This means that the stop may be trailed or updated during the life of the trade. Okay, so this is the open trade block, and we may have a series of trades running simultaneously in the market. Usually, the number of open trades that at simultaneous open trades is about 15 to 20 trades. It oscillates since many of them are very short term and they tend to close during the most volatile hours of the day, but that is usually the number. We have a trade frequency of 3 to 4 trades per day, and this is increasing as we grow with the number of strategies. Okay, we are about to launch 2 new strategies this month. Okay, we try to diversify the concepts behind each strategy. We'll launch a strategy based on pivot point trading and another one based on the concept of randomness, okay, with a combination of oscillator work. And each strategy is then explained in more detail here and on the strategy page, where you have for each strategy, you have a brief explanation, the type of strategy, the performance, the real performance of that particular strategy. Some strategies we divide them by time frame so that you can see how that particular strategy worked on that particular time frame, and the performance statistics you see, these are based on real trades. Now, the results we see here, we call them hypothetical because they are not taken from a real account. They are calculated on our side. We do have a real account being audited by my FX book and on an external link. You can get into there through the frequently asked questions page. And here what we do is we isolate each performance record from each individual strategy from all the others, since the real track record we have combines all strategies in one real account. So the way to separate the performance of each individual strategy is by constructing an hypothetical performance record, but in reality it's based on real trades. The only difference here between what would be the real result is that this particular calculation doesn't take into account the interest rate differentials, the swaps. So we might infer those costs into the overall returns. This strategy in particular, the spread reversion of 30-minute, we can see here the average duration of each trade is about 1 day and 5 hours. So it's not a strategy, this one in particular, that is high sensitive to swap rates, because most of the trades are closed, in fact, within the same day or in the next market session or 2 market sessions ahead. The trades are closed. So it's not negatively impacted by the interest rate differentials. And you can see other performance statistics such as the average profit, average loss. You can notice here how the average loss and average profit there is a slightly asymmetry to it. Okay, we work a lot with asymmetrical ratios in our risk to reward trades. Okay, um, many of our strategies, they risk a little bit more than they aim for as a target, and this results in a win rate that is a little bit higher than if we would use a one-to-one or even a, um, a ratio which would have much smaller stops than targets, which normally is detrimental to the win rate. So uh, we have slightly higher average losses than average profits in our strategies. Okay, and we see also the number of accumulated trades. Obviously, the lower you go on the time frame, the more trades are accumulated in time. This one in particular is running since 2020 here, February 2020, more or less. So it endured here. You can see the strong dip here in March last year with the pandemic crash, and then the recovery. And recently we had this severe drawdown here. This is very much related to the type of strategy it is. It's a mean reversion strategy. That means when the market is very directional, very trendy, this strategy suffers. It's usually it likes to pick short-term reversals and profit from this day-to-day typical oscillations in the market. And so when the market from time to time is unanimous in its direction across several pairs, this strategy tends to suffer a little bit, but it's already on the path of recovery. Then we have the description of the strategy and also a chart of the tools this strategy is using so that you can understand the strategy a little bit more. We do not hide the strategies in a kind of black box system. We explain the details of the strategy so that if you are interested in building these strategies on your own or even designing them even better, you will know how we design the strategies. Okay. For instance, we are launching, as I said, a new strategy this month based on the concept of randomness and the precisely the risk to reward ratios, working with different risk RR ratios, and the whole process of the concept and the preliminary tests and the validation of the hypothesis. All this was done live in our webinars with our users, and finally we designed the strategy so they understand how we designed the strategy, what was the concept behind it, why we did use some tools and not others, and why some parameters and not others. So you get to learn with us how to build strategies also on your own. Okay, and that's the aim here. We have some strategies which are deactivated, means that they pass behind to a quarantine, let's say, where we retest them, we redesign them, or fine-tune their parameters in order to relaunch them eventually if they pass the tests. Each strategy goes through a backtesting a process where we validate the strategy pardon, in its performance, and only then we pass it to a demo platform where we figure out if the strategy continues to execute the trades like we saw in the backtesting, and finally it goes live production That's usually the process. And our aim is to make it transparent for our users so that they can see. If you stay long enough with us, you can see the process of how is it to build a strategy. Okay. So there are several strategies you can choose from. You don't need to follow blindly all of them. You can choose to follow the ones which are currently giving better performance or more robust results, the ones that we also feel more confident about, and this is something we also share with our users, or the one that fits better into your profile because of the frequency trades, because of the concept it uses. And you may even use the signal and not to execute and mirror and copy the trade blindly, but to use the signal as a piece of information for your trading. And what we usually do during the day, so let me come back here to the signals page. You see here on the right side of the screen, well, we do announcements, analysis, okay. Also, the each time a signal is launched, you can follow it on the. Okay, you see by me clicking here on the chip, it highlights the trade that was recently closed. Okay, and we also announce different webinars from other authors. Okay, here you see, for example, here's another closed trade, Euro Australian. Here was an open trade. So if I click here, it should be it takes me here to that one, which was already closed. Here we have pending orders. Okay. We have a strategy that is discretional in the sense that we use limit and stop loss orders in the market, and we plant them, and they are as soon as they are triggered, the chip will appear here, the small box, and also the corresponding trade signal here on the right side column here. So we have a series of pending orders awaiting the market. So if you are more prone to use limit orders instead of market orders, this would be something for you. So we share this where we have for each pair we have the type of order, the entry price, the stop loss level. And we have long and short trades. Okay, this is another type of strategy. Then we work, as you see here, we report and analyze different markets. In this case, the Ethereum, Bitcoin cross, and we share the charts and the analysis. You can expand the boxes to read about the details of the analysis. Okay, recorded webinars are announced. Okay, we also inform on a daily basis about the how many trades we currently have open and what is our effective leverage at that point. Okay, so that you can have this in mind for your own leverage and margin calculations. Okay, and each morning we start the session by announcing a little bit what are the main themes of the market, what happened in the during the Asian session, and a recap of the last topics that were making headlines, and we start the day by announcing that, or if there is an economic data releases to to come up that day. So we announced that as well, so that you can be prepared and you know about the main topics where that are being talked about in the media, at least. Okay. Then we have, as you can see, this when a trade that is already opened, when it, in this case, it's already closed, but at that point in time here, the stop loss or take profit has been updated. So there's a new signal. Each time the trade is updated, users are informed as well about the trade. Again, here we also share short videos, for example, here, and we explain in these videos. We often do what we often do is we take these signals and we contextualize the signal beyond what the strategy is looking at. So, for instance, here we go here on the euro pound short trade. Okay, we know through the explanations we give about the strategy, how it works. We even do webinars where we go in detail, showing the flow diagram of the strategy, how it works, and when it triggers trades and how it calculates the exits. All this is explained to you. And but beyond that, we usually take that signal and we go in the market. Let's say we go here to the euro pound, yeah, and we put that that trade in context. Okay, so we look at the bigger picture, like I was looking at here, on the daily chart. Okay, we work a lot with me personally. I work a lot with channel work and parallel lines, combinations of intersections of supply and demand, horizontal levels and dynamic ones. Okay, so we contextualize that trade. Okay, we see the bigger picture, and then we go in detail and we show the geometry of the trade, where the trade was opened at. It is a short, like in this case, it's a short at 0.8539. So that is our entry. This was the previous trade. Okay, this was a buy trade. In this case, we have a sell trade, and then we try to adjust here the lines just by dragging the lines up and down. We try to come up with scenarios how this trade could eventually work out. And we have here showing the exit, the take profit. Okay, we can see here this level. This horizontal level, which was resistance before, it was broken here to the upside. It could eventually flip polarity here and attract the price down to it. In that case, it's more or less coincident with our target level. So we do have a reversal here, and the market pierces this level at least, or closes below. Our take profit would be liquidated. And we have to stop here above, and we try to see if we have any barriers stopping the price from going into our loss exit. And we have this line the price is currently reacting to, which is a line that we just anchored here on this this small base building here after this strong fall. This line is just a parallel one to the one that we use to more or less to track this this swing low here, which also protected our stop. This trade also went into negative at the entry and finally reversed. So we have good chances here eventually that the market reacts to this level and tries to recapture here this support, which was resistance before, eventually trying to regain higher grounds here, and reacting first to this descending channel line. So that would be one contextualization here of the trade. And the idea is that you, through the signals triggered by one or the other strategy, that you'll learn how to contextualize the signals using support, resistance. We also go beyond that, and we look into other tools that we have for free at FXStreet, like the confluence detector. So we look at the confluence detector and try to see if there are technical layers and indicators between our enterprise and our exits, and what is the path of least resistance, so that the price may tend to go to one side rather than the other. We may look at order flow. We may look at indicators from third parties, how is the liquidity distributed in that particular cross, and try to infer where orders are located, so that we can anticipate the reactions and the accelerations in price based on order flow. So we might integrate different tools so that you can grow your arsenal, so that you enrich your knowledge about different types of analysis and tools, and how to combine them, but at the same time also trying to simplify the whole process by explaining the nature of each of the tools, so that you don't go just round and round looking for the holy grail, but rather using the inverse approach. Let's say I want to measure acceleration, okay, and I want to measure acceleration, and so I want something that is highly sensitive to deceleration, for example. Then you might look at, well, perhaps a stochastic, or you look at an RSI, a little bit perhaps shortened in time, not the 14 period, but go for a 10, 9, 8 period, and you get something a little bit faster, a little bit more reactive here to the recent price action, by excluding so many larger periods, and so on and so on. So we can teach you the nature of the tools, so that you can explore your trading arsenal by starting with concepts, starting with observations, and then looking for the tools that may translate into technical information that particular setup that you are looking at. Some observation. You can start on something very simple, like saying, well, I noticed that most pairs break above or below the previous day high and low. Just something very obvious, like, and you may start formulating the question, what if I trade those breakouts? What I need to measure a breakout, which is so common, a pair breaking above or below a previous day's range. This is very common, but how can I filter what do I need to extract from the price, yeah, in order to reduce all the occurrences and all the breakouts that occur in the market, to only the best ones, the ones with more momentum, perhaps. Or I look at where the price, when it breaks out a previous day's range, where does it tend to go? Is there a certain level or cluster of levels it tends to attract the price? Okay, so let me check that as a hypothesis validation. Or if it doesn't work out, can I change completely the thing and say my target, which was usually a target, can I use that as a starting point and say, when there is a breakout from the previous day range and it reaches the target, can I then enter a trade in reverse? When others take profit, I reverse and enter. So we try to convey you the whole logic of market observation, and then the transformation of these observations into hypotheses, and how to validate those hypotheses by knowing the tools, by knowing the nature of each of the oscillators, of indicators, and such. And then once you have that, then lastly, you start building the strategy, and you start measuring it, which is another step in itself. Statistical measurement. What do I value the most? The win rate, or the average win and the average loss, or the payoff ratio? What do I need for my personal satisfaction? Can I cope with a system that loses like 80% of the time and wins big 20% of the time? Or do I prefer something that wins more often? Yeah, and from time to time it takes a little bigger hit, but at least I have the satisfaction that I'm winning more times than not. Do I have the time to take all these signals? So do I need a system that triggers only one trade per week? The opportunity cost is very high if I lose that entry. So perhaps I need something that is more frequent, that I can lose an entry and do not mess up with the statistics and so on. So this whole things we try to convey. Okay, so the propose, just to sum up here, the philosophy is that we are a signal service. Yeah, we produce and work hard on producing automated systems that produce signals, and but at the same time we use those signals as just an excuse to put everything on a plate and explain everything from the concept through the concept validation, and then the follow-up, the contextualization of those signals with support and resistance, with Elliott wave, if that's the case, or with oscillator work, and so on and so on. Okay. Let me see if there are some questions here. What do you have buy and sell open trades for the same pair? Well, that might be. It's a very good question. Thank you. We on our account, we work with hedging. That is, we do not take advantage of hedging in itself, but we allow hedging. Okay, so because we have different strategies running simultaneously, and different strategies, and not only different strategies, but also different time frames. Okay, so it's entirely possible that we may see we may see opposite trades or hedge trades, where one strategy is going along one pair and the other pair. We may also have the same strategy on different time frames, and we may have even it's more rare, but we may have from time to time the same strategy going long and short the same pair, not exactly at the same time, the entry, but the during the life of the trade, we sometimes find, for instance, the shortest term one, which is the spread reversion on 30-minute. It's rare that we see an opposing trade, but because each individual pair is parameterized differently, that is, take for instance the euro pound here, the euro GDP, and on the 30-minute, yeah, the short leg has different parameters than the long leg, yeah, different parameters, and they are tested separately. They have the same strategy design, the same rules exactly, but the parameters of the used for each case are different. So we may have cases where you have the same strategy, the same pair, the same time frame, even going opposite. Yeah, they do not open the position at the same time. Otherwise, if that happens, something is wrong, because that would be too contradictory. But you may have one position open and the next day it's still open. Yeah, the next day the pair moves against, so it is perhaps losing. Yeah, and because of the way it moves against, it triggers the opposite trade. Yeah, and usually because this is short term, the one closes at a loss and the other as a win. But we also had cases where both were closed in winning trade. And by the way, we have had, I think, since in the recent days, the 31 of March, we had a string of consecutive wins of 15 trades, and we just had today this the euro pound minus 25 pips. This was the first loss in a series. We don't see the complete list here of the 15 before, because as they mature, as they are older, we do not keep them here on the page. But we had a good run. I think we reported about that here. We reported when we had 10 consecutive winning trades here, and then we went on. There was another one closing positive, and then another one. So 11, 12, 13, then 14, and then we have that the next one, I think, made the 15. It is one, and then we had the next one was a loss. Yeah, on the same pair was a loss. So we had a beautiful run up here in equity lately, but we may have also strings of losing trades, and we will also announce them at the end of each week. On Friday, we convey the statistical figures for the week. For that particular week, let's see how it looks like. We must have something here. Here it is. So so last week we had a plus of 176 pips accumulated. That was the percentage on our real account, the number of trades for that week, the win rate achieved, and the most traded pairs, and then per strategy, those strategies that trigger trades during the week, we had also the individual results shown. Yeah. Okay. There are any other questions? Just feel free to drop the questions here. Yesterday we also covered the XRP Ripple. We noticed it was breaking an important area, so we announced that as soon as we saw the breakout. It was I think we were somewhere. Let me go here to the dailies. We had this path on our analysis since it was trading here below, and we saw the potential for this market to go from one level, from this broken resistance, which was the one coming up from the highs here of 2017, January 18th, and we were just breaking above it, and the next ascending resistance, and there was a confluence with these dashed lines, which are potential lines here of resistance based on Fibonacci channel extensions, and we had this intersection coming up, and we said that could be eventually a target. We had that target here, more or less above or around the round figure, $1 per Ripple, and well, we reached that target. We pierced into touching here the dashed line, which was an imaginary just line projected. It was not hinged on any historic resistance before, and we reacted lower than. Yeah. So in cryptos, we work a lot with logarithmic charts. We combine logarithmic with arithmetic charts. You can see, for instance, here. Here we have an arithmetic chart for Bitcoin, for example, on a weekly. And then on the same asset, on Bitcoin, here we have a logarithmic chart. A logarithmic chart. Okay, so this enables us to extract different scenarios, different targets. Yeah, and usually we do not trade actively here yet in the crypto world, but we do announce the most interesting potential entry levels and targets, so that you can follow this. If you follow these markets, if you use to trade these markets, you can you know that we follow them close as well. So we can also look at gold. Usually we do a lot of work here, for instance, with commodities. We like to look at commodities in a multi-currency basket. Okay, we look at gold here, for example, on this chart, and we look for the different price path, and this is a chart of gold in a arithmetic chart, but based on a basket of currencies, so that we can see the strength of gold against all others. But because many times or sometimes the price of gold oscillates because it's quoted in dollars, and so if the dollar moves strongly, that affects the price of dollar quoted commodities. So we try to get a better intermarket picture by looking at these commodities in a basket of multi-currencies to see if that strength in the commodity is really based on the commodity and not on the currency side. And then we go obviously into the commodity in dollar terms, and we look for what's happening. That here we have in gold, for instance, is a very nice breakout here. We are having here a reversal, a type of double bottom here, a classical chartist figure. It's about almost 5%, 4.5% of 8. So that could bring us here to more or less this target here, 1830s, 35 more or less. That could be the target of this double bottom. But most interesting is the fact that we are breaking above this descending line. So should we sustain that break by today's close, that could accelerate towards this ascending resistance, which was support before. It could turn into resistance, and here we have this confluence of levels, okay, which could be an attractor for prices. And then if obviously that stays en route here to the 2000 figure, which could be another target for the midterm. Yeah. So we analyze commodities as well. Let me see if there is another question. Hello, and thanks for offering the free webinar. I'm only trading 4-hour and daily time frames. How many signals are generated on these time frames? Also, is there any strategy that trades fake breakouts? So we on the 4-hour in daily time frames, we do have strategies running. We have the spread reversion is working on 4-hour as well. We have the relative strengths, the sell and the buy side, which are based on daily prices. And I can't say you exactly on a daily basis how many signals are triggered by these strategies. It's a minority. Most of the signals are traded or are triggered by by the 30 minute, 1 hour, especially 30 minute. As I said in the beginning, the lower you go, the more signals you get. But we have the pending orders, which I referred back into using the list which we shared here before. And the pending orders, they are time frame independent, let's say, because you can just program them. We give an explanation for each of these trade ideas. We publish a short video, or during the webinar we explain them, and so you know exactly why we are placing that trade there. And these are not based on timeframes per se. These are based on technical levels, which you can see on any time frame, let's say. But I understand your case is probably due to time constraints. You cannot follow the market as closely as a strategy that is entering and exiting based on smaller time frames. So you need something that goes more with a swing type of trading or position type of trading. So that perhaps the limit orders will be a combination of limit orders. We have another strategy called the RSI, overbought oversold, which is also a reversal trend reversal strategy, which is also based on 4 hour, one of its time frames. And so I think with that you could do it. Perhaps you find a way to trade lower time frames as well, based on the frequency. You can visit our page and the insights here, the channel. And for the second part of the question, you ask if there is a strategy that tricks false fake breakouts. We don't have at this time. We don't have. We are about to launch a pivot point strategy, which is another colleague of mine who designed the strategy. It's Thomas Sales. He may explain once we launch the strategy. He may explain if there is something like if the strategy has something to do with the fake breakouts. I think it's more based on momentum, but we could eventually, if that is something that is of interest to you, we can take the concept and we can develop a strategy. Obviously, that will be great. We have our own ideas and experience, so we can start from there and say, okay, let's take a fake breakout. Okay, let's define a level to break, and then let's define what is fake, what is reversal. Let's measure these occurrences, how many times they occur, and which is the magnitude. What is the magnitude, and then start formulating an hypothesis, and then come up with a strategy on that concept. I like it. I like the fake breakout. I like it. Mm-hmm. Thanks a lot for your input. Okay, so we have to wrap up here. Another question, just before we wrap up, is the entry price of the signal based on price at that moment, or has the spread factored in? This is the market price. The spread is factored in. It is well, it depends on well, there are subtleties and slightly differences between different platforms. That is our entry price. That is the price we get filled in. So it's once at the same time the position is filled, it is announced. In any case, we try to build strategies that are not sensitive to this small differences in price. Okay, so that if you choose to follow these signals and to execute some of these signals or mirroring it, that you have enough time to profit from it. So we do not do any scalping here that wouldn't allow you to or wouldn't benefit you in case you don't have exactly the same bid and ask prices that we have. So we try to take that in consideration and not capitalize on high frequency or scalping trades which couldn't be follow up. Also because we like to give explanations of the trades, and if the trade is happening too fast, it does not give us the time to prepare the context and to send that out to you. Yeah. So okay, so just just to finish, a brief description here. I'm logged in on a different browser here as a non-member, as you can see. So this is what you see when you are not premium member, and once you click on premium, you can see the different okay, the explanation, what it consists to be premium of. You have also access to webinars, to other contributors' webinars, to the archive of those webinars. It's a tremendous resource of information. Okay, and here you have the different plans: the month, the 3 months, and the yearly. And once you subscribe to that, you get access to the page where we were, and you will see the trades in real time, our postings. You have alerts, and you have also access through our mobile app, where you have the same information as well, so that you can read it on the go. Okay, excellent. So thanks a lot for be patient during this introductory session. I hope it was useful just to get a glance here of what we do. And well, I really look forward to see some of you being members. Bring your ideas with you, and let's design strategies together if you are into. I very much appreciate the idea that to elaborate things together, and let's grow together. This is our aim. So thanks a lot, and for those of you who are members, we will meet tomorrow. Again for the weekly the 3 weekly webinars that we do usually, and stay tuned, and thank you again. Bye.